Good morning, everyone. Stock market technical analysis. We're going to get into what I've been talking about here for the last few videos. I'm seeing some movement in the markets, so I'm going to point out some general market analysis. Again, using technical analysis, that's going to be our guide. And then we're going to look at some individual trade ideas that have either been working or starting to work. So we're going to go ahead and point those out as well. And scan around for anything new. So we're going to start out here with triple Qs. We'll get to that Rio one here in a second. Triple Qs. All right, down today. Gapping down and, so far in general this morning, looking weak. As far as I can tell, it looks like we're actually continuing that ABC correction. So we've got kind of the A here. We got a bounce or a counter trend, and then we're going to go down for the B. Now, again, the probability was to the downside because if you look, you've got negative divergence right there on the RSI and the PPO. So this former high right here was a divergent high, meaning that you made a new high in price, but the momentum was clearly going down. Okay, so there's all kinds of indications right now that I'm seeing that tech stocks, this triple Q sector is likely going to continue to go to the downside. Near-term target, you obviously have these former lows, which really is this area right here, 383. It's probably where we're going to stop today. But we'll see, if the market wants to sell off more. That's your former highs right in here. We've already hit it once. We bounced off of that. Here's your bounce, and now we're coming back down into it. I think we're going to fail this and break it. I don't know if it'll be today, though. They might park it here and wait for the Fed. But this is the area where you're likely going to see, this is kind of your pivot area. And we already hit it once, so a second test of that is probably going to fail. And I think we're going to come down to this trend line, this blue trend line. You've got lots of reactions. 1, 2, 3, 4, 5 tags of that, meaning it's pretty good support. This is really your support going all the way back to September of 2020, but pretty much all of 2021. And coming down and hitting that would be, this is where the buyers, the dip buyers are likely going to be at. So we'll look to cover a short trade probably right down there. I've got it kind of circled, but look to cover the short trade that I have on the triple Qs down here. And then we'll, if there's a bounce, which I think there was likely to be a bounce, and then we'll wait for a break of that if we're going to get a break. Or, you could maybe go long. I'm not seeing signs that it's going to make sense to go long down here, but we'll keep an eye on that. So that's what I see there in the triple Qs. SPY is going to look pretty much the same. So SPY, you can see we bounced off the former high, which is really 454.20. Came down, hit it, undercut it a little bit, but basically bounced off it right up to resistance, which was your former high, and now we're selling off. It's still anybody's game in the SPY, but we do have negative divergence. I've got it kind of marked out right there. Clear negative divergence telling me that this former equal high right here, see that equal high from before? Well, that was a divergent high. It was a high made on much less momentum, and we're starting to head lower. So I think it's likely that we're starting kind of the same pattern, an ABC correction. And it's basically looking like this, where you head down, you bounce counter trend, and then you head lower like that. Now, this area down here, this red trend line, that's going to be your longer-term trend line of the bull market. So a break of that, and there's bigger things going on. Till we see that break, the market's still in a bull trend. But here's your 2009 lows, and as you can see, I've kind of got this price channel marked out. We broke it in 2018, and the Fed's been involved in the markets, pretty much controlling the markets ever since. But you can see basically we pumped it here, hit resistance. There's your COVID drop. Now the Fed's managed to recover it, but if the Fed has to tighten, if they actually have to tighten, and you can see all the inflation readings that are coming out are just coming in extremely hot. So it's almost forcing the Fed's hand that they're going to have to do at least some tightening to take some of the steam off of this inflation trade. And if they do that, they could potentially break this trend line and put us into, pretty much put us into a bear market. All right. So we'll watch for that. That's bigger picture stuff. For now, we're looking for a move down to that trend line, which is about 445.50 or so. And bigger picture, looking at the small caps here, you'll see that this looks like a topping pattern to me. in the IWM. You can see all year long we've basically traded sideways, just kind of grinding out a top. We had a short-term breakout of this trend line, and that was instantly failed. Then we had a false breakout. So again, I talked about this back here. I didn't like this breakout because we had negative divergence, and people asked me why wasn't I bullish? We just broke out. Well, we broke out on price. We did not break out with good, solid, bullish technicals. We broke out with negative divergence, telling me the breakout had a higher probability of failing. And sure enough, it did. And once it failed, usually you're going to head down to the bottom of the range. And there's the bottom of the range down here. So we're down near there now. Until you see a break to the downside of this range, then, we're just down at the bottom of the range. So that's what I'd be watching for on that one. Here's a long trade idea I've been talking about. Rio, and really just these iron ore miners. Rio's up 2% today. Let me move back to the daily here. And you can see we're continuing to kind of work our way higher. So again, the markets are down, and yet we're finding longs that are winning, and that all comes down to the using technical analysis to help you find those. They don't all work. All the trades don't work. And the ones that do work, they don't always work right off, right when you make the call or take the position. Sometimes they take time. So that's what I see here. Rio still looks good to the upside. Same with some of these other ones. They're continuing to kind of work their way higher. So in general, these iron ore miners, they look good. Look like they've kind of bottomed out. And you remember, these have corrected from their highs. Rio fell 37%, so it's already had a good size correction. We're not looking for anything major as a long-term bottom, but I am looking for a move up to this 71.25 area. Okay, let's do a quick analysis of the FANG stocks, these mega cap tech stocks. Here's Apple. So Apple, if you look at the hourly, I've been watching that trend line right there, and we did break. We're starting to drift lower now. So as I drift over to the daily, you'll see that we're starting to kind of drift lower. Now, we do have this bearish rising wedge pattern, and I've got the top end marked in blue right here, and I've got the bottom end marked in red. And we broke to the upside. So, that can get faded into. We did have negative divergence on the daily chart on let me just kind of mark it out so everyone can see it here. Right there. That's negative divergence, meaning we made it kind of a slightly lower high on the RSI, but much higher high in price. So there's your negative divergence. I think it's likely going to get sold into pretty hard here. And, if Apple goes down, it's so heavily weighted in the indices, it's going to be a real drag on the markets. So watch for that. Let's look at Google here. Google, all right, this is coming off your March 2020 lows. So this is the entire Fed-induced rally, basically. And we've got good support right down here on the daily chart. You can see up towards the top, it really started to get pretty choppy, but they just kept recovering it. But now, now we've clearly broken that trend. And to me, it looks like we are starting to make, let me just point this out real quick. We broke the trend right here. That trend break came with negative divergence, big negative divergence. It's been building for quite some time on the PPO and the RSI, basically. Let me get that back down there. And you'll see here that there's your break. What they did is they broke, nice sell through, and then a bounce, but we're starting to drift lower. And you can see we're making lower highs right there. So as far as I can tell, we are starting a downtrend in Google. And again, you start knocking out these mega cap tech stocks, there's not much strength left in the market besides these things. So look for the Google to take out the lows. Likely they're not going to do it until after the Fed. So we'll see what the Fed says. But if the Fed is serious about trying to fight some of this inflation, they're going to come out hawkish. The market's going to panic, and we're going to start to get, some impulsive selling. And as the market sells down, 10%, 20%, wherever it's going to go, you'll see the Fed start to lighten up. They don't want the market to completely collapse. They want to walk it down, most likely. They want to manage it to the downside. And it's whether they can. If the market might impulsively sell off and it gets away from them, they want to manage the downside, but the market might not let them. Let's just put it that way. Facebook broke its bullish trend. I had this marked out a long time ago. This is your bullet or your bearish rising wedge pattern here. Clean bearish rising wedge. We broke right there. That was your sell signal back on September 20th, and it's pretty much been down ever since with counter trend bounces along the way. So I think Facebook's going to continue to the downside. I don't see anything different there. And Microsoft, this is your culprit for today, I would say, in the triple Qs. Big selling in Microsoft today. Big gap, we gapped down and just pretty impulsive so far, breaking through what looks to be a near-term support shelf. You can see we held support many times. We tested it, broke it once, and then recovered it. But today it's the second attempt, and it really is pretty impulsive. So I think this is the real deal to the downside on Microsoft. And there's your negative divergence. This was a divergent high, so that was higher high than that high, and you'll see the momentum is clearly heading down. Okay, so that was your tell, kind of your indicator that when you made this high, you were likely about to reverse in this area and head lower. And there's your, that's basically a sell signal today on Microsoft. So we'll see if that holds. See if this holds down here, but that is a sell signal. And you start to get sell signals on the FANG stocks, you're going to start to see the market come down. Someone asked me to analyze Coca-Cola, and I'm seeing some relative strength today in some of these defensive stocks. These dividend payers, safe, kind of big blue chip safety plays, non-growth based. Coca-Cola up, about 0.5% rallying. You've got, you had bullish divergence. I see that. See the momentum right here. See how that was drifting higher in the RSI and the PPO, and yet right there you made a slightly marginal new low. That's your divergent low. And what I'd look for is a breakout. Now that breakout's clearly already taken place. So if I go to the hourly, you do mark something like that basically, and there's your breakout right there and gap up the next day. Clear breakout and a buy signal. It's already played out though, it's already started to move higher. We're making a new high. Likely heading up to these all-time highs or up here. In general, I'd be bullish this. And then looking at some of these other defensives, KHC, I'm seeing this thing up 1.5% today. And someone asked me if I'm in it, no, I stopped out. So I stopped out right about where we're at right now, but basically right in this area. This day right here, November 24th, when we gapped down and closed down there, that's where I stopped out at. And that was a good move because it did sell off, but we are starting to kind of work our way higher. I don't see a recovery of this support line, though, at about 35.42. So until I see that, I'd say we're still heading lower on that one. I just don't see enough in the chart here to get bullish on it again. So we'll just keep an eye on that one. And gold. All right, so, I'm seeing some relative strength in gold. And it's, let me just kind of talk about what we see. So here's gold bullion. The inflation news came out hot. This is what the market's been doing recently. Anytime you get hot inflation, the market's been selling gold, because they're anticipating that all this inflationary pressure is going to cause the Fed to hike rates, which I think is probably, it's pretty much priced in. The market's pricing that in right now. That's why you're seeing the tech stocks sell off. The market's pricing in rate hikes. And so you're likely going to get some sort of hawkishness, faster Fed taper, rate hikes, things like that. And so gold's kind of pricing that in. But gold's not really selling off. If you really look at it, and I roll out on the hourly, we're just kind of basing out. And so this really, to me, looks more like a consolidation area where we're, the buyers are accumulating gold and we're going to move higher. So that's just something I'm kind of pointing out. And then longer term, if you roll out, you'll see here's your bull market in gold coming back to 2018. I've got all the tags of support circled. And as I zoom in, you can see here we are. We're just still kind of in that area. So looks like, there's no technical breakdowns in gold. Still above, still holding support, still holding the trend line, and, still basically, really still just building that bullish divergence, which really started back here. All right, so you'll see here, We were making lows, and then this little dip here made a equal low as these lows, and yet look at the momentum moving straight up. So bullish divergence was back there, and we are clearly just kind of continuing to hold that bullish divergence while building a base. So I don't see anything technically wrong with gold. You know, the markets, you know, the gold miners continue to kind of grind lower, but the buyers seem to be there stepping in. You'll see, like, you know, today Agnico Eagle's up. You know, it's not up a lot, but it's up a little. Newmont is pretty much flat. They tried to sell it down earlier, shake some people out, but it's flat. Barrick Gold basically flat. So the major miners are you know, and here's another miner that's up. So some are down, some are up, but the big ones are basically flat, and that tells me that there's some relative strength here for sure. And yeah, still holding that bullish trend. So again, still bullish on these gold miners. Let's look at Tesla. So I see news today that Elon Musk was talking about accepting Dogecoin for merch on the Tesla site. Again, you know, it's just amazing to me, some of the fundamental stuff behind this guy. Basically, he seems to find ways to try to pump his you know, Tesla stock using crypto, because the crypto is unregulated, so it's not necessarily illegal. Basically, he's not breaking any regulation. And then I see a headline that he's selling another, you know, that he could be unloading 18 billion worth of Tesla stock this year. So, you know, he's unloading while he's trying. Oh, sorry about that. While he's trying to, you know, pump the price with other things. I'm seeing signs that these meme stocks are starting to unravel. Tesla is, you know, kind of the king of the meme stocks. It was really the first major momentum stocks, part of the retail mania. And I'm seeing signs that it's starting to unravel. So we have a gap to fill right here at 1910. Let's look for that to be a reaction point. And that's kind of the former high right here. A break below that 910 area. And we start to get a daily close below there. I think we're going to see Tesla start to come down. All right. So that's really what I see on that one. Slight, you know, not a whole lot of negative divergence really, because if I roll out, you'll see that we recently made a new high, and this is trending down, but price has been trending down as well. So, kind of mixed on this one. The other one that I'm seeing, though, AMC, came down to my support zone right there at about 2045. And I had that marked out. That's kind of your former high. So we sold down. It was down about 8 or 9% at the open. And that's the area you want to cover at, you know, if you're short, because it was right at support and you got to bounce. So, you know, we'll probably bounce here. I think we'll probably continue, maybe grind around, bounce up to this $30 level. This is the objective area to short at again, all right, up around that 29.80. You want to step in a little bit early because you don't want to wait for the last penny. But that's the area that I'd be looking to short at, and wouldn't really want to be short now that we've seen a pretty good size move to the downside right into that support. Okay, so that's that one. GME, this one's right at support. You can see it's bouncing right here at this 136 area. So I've got that kind of marked out. You know, you've got several reactions here. A break of that, and this thing should really unravel pretty quickly. So look for that. Again, you know, I know that there's this diamond hands thing, but the diamond hands, they're only diamond hands when it's going up, and it's an easy trade. You know, you buy momentum when it's going up, and you've got diamond hands, and even if it pulls back, you know, maybe you're still profitable, so you've got diamond hands. It's only when you start taking on losses, pretty heavy losses, that those diamond hands pretty much fold, and it's just, you know, human mentality. It's greed and fear, right? Okay, and let's look at a new trade idea here. This is Ford. Now, this is kind of a value play, so, you know, I am seeing slight rotation into value and defensive stocks, but, again, the technicals still line up for a short trade on this one. So I want to point this out. Ford, from the March 2020 lows, clear uptrend channel. Now, we did break it once before, and this really was a sell signal as well. We did have some follow through, not a whole lot. So that was, you know, we have to kind of throw that out. But we've recovered that trend line, and you can see we're just continuing to kind of hold that trend line. But we have clear negative divergence that's been building now on Ford. So each new high, that was a divergent high, and then that was a divergent high. So what we're looking for the sell signal is another break of the trend line. If we get a nice impulsive breakdown, then that's going to be your sell signal. And Ford's likely going to trade. We'll watch these recent highs here as a level to watch. We'll kind of move that up. It's right about there. First level of support, 1650. We break that. We've got some other levels down here at 1344 and then what, 1114. Those are probably about all we'll want to watch. Okay, so there's a trade idea. It's a short setup, not actionable yet. And Carvana, I talked about this one yesterday, but we have a clear sell signal. So here's our daily chart on Carvana. This is going back all the way to 2017. Clear uptrend line here. This break right here, this is COVID, kind of a liquidity event. So we just kind of X that out as an outlier. And the longer term trend stands right here. And you can see yesterday I talked about how we were kind of grinding along. Looked like we were going to break to the downside. And there it is. Big sell signal today. Big breakdown on the daily chart. Impulsive and, nice follow through to the downside. So I'm looking for more downside on this one. Near term support, probably right in here, 225.57. Likely going to get a bounce there. But ultimately, you got to go back and look at the bigger picture. We're breaking a long-term trend line, a long-term uptrend line in this. So, any kind of, it's basically turning this chart into a sell the rip. So if you sell down, hit support, you bounce, you look to re-short it, sell the rip, and look for, over time, this to work its way lower. Final target on this one, I'm not so sure. I'll have to kind of dial it down and look to see where we're at. But I'm looking for more downside in this one. And net, we're just following up on this. This trade's well underway. Talked about this trade. I've been kind of talking about this for a while, but we had an initial sell signal back here on the 22nd. And then we also created this bear flag. And I talked about a potential break of the bear flag should mean more downside. And sure enough, we are just continuing to that bear flag. So the target right now on this one's about 111, 110.50 as a level of support. And then we have some good support kind of below that down here at 95.08. But clearly heading straight down. From the highs now, this thing's down almost 42%. So clearly a good short, and I've been kind of all over this one since I saw it really back testing this upper trend line and then this sell signal right there. See the negative divergence, the big negative divergence? So from the breakdown, even if you took it at the very end of the day, you'd be profitable now by about 31%. So good trade so far. It is coming close. We still got a ways to go. I still think there's, a lot more downside here, but definitely not as objective as if you shorted right up here on this sell signal. Okay, guys, that's all I got. I'm going to wrap up here. Leave me a thumbs up if you find some value in the content. Check out the Stock Market Technical Analysis course. I go through all these concepts, which will give you the skill set that you need to help you find more profitable trades as well. And I'll catch you guys on the next one. Bye.